Good morning, everyone. Sorry we are a moment late here this morning. Brian and I got carried away having a chat amongst ourselves. Welcome to Morning Market Movers, where we do some live analysis for day trading, and we're going to be taking a look at hotspots in the markets for today. We'll take a look at some of the markets and take a look at the charts and take a look at some interesting levels, as well as share headline news and what's moving the markets today. My name is Todd Rich. I am with Nadex. With me, as always, Brian Caprice from Keep Trading Simple. And yes, you can hear my voice. It's still lingering. Um, but for my attitude, and from my backdrop, uh, it's a good day. Nadex is officially 100% part of the Crypto.com family. So it is Natex, powered by or brought to you by Crypto.com, which means that we are going to be occasionally talking about cryptocurrencies. Not as much at the moment, but soon we'll be talking about it every day. And I will tell you, it's if you're looking for price action and you're looking at charts, and Brian has always wanted to say a chart is a chart is a chart. Let's take a look at levels. And you want to get in on the action, and you're looking to trade some of those price swings without having to have a wallet, without having to have actual cryptocurrency. At Nadex, you're going to be able to gain access to those markets right through Nadex with your own US dollars, access to price action, no wallet needed. And because of Nadex products, you know that we've got clearly defined risk getting into a trade, so no surprises. So it's going to be some fun times ahead. So we've got that to look forward to. What are we going to be looking at today? We are also going to be looking at energies, oil through the roof, nat gas going with it, and we're going to take a look at equities. Clearly, we had a highly volatile day yesterday. Expect more of the same today, and we've got some news announcements. We've got Powell speaking today, and we actually already know some of the things he's going to say, which we will get into. Rates are going higher next month. So they are going to be raising in a couple of weeks. But next month, it's this month. We're in March. Hey. So yeah, we're definitely going to be looking at that. And then we've also got the industry oil inventory report. So we'll be taking a look at all of that. Before we jump into it, I do need to share this disclaimer that trading involves risk, may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We're doing this for your education purposes. And by the way, as we're doing these, I do like to say, if you're watching us on Facebook or if you're on YouTube, drop in a like or drop in some comments. We really appreciate it. We're going to try to mix these up a little bit and make these a little interactive if we can as we move forward. All right. Um, just flipping over, and I just want oil. I mean, marching straight higher. Now we're hitting levels from 2011, and if we go a little higher, we're going to go back to 2008. It's yeah. Oil inventories. We saw the drawdown on the. We'll see what the report looks like today, the official report. But we know that inventory is down. Supply demand is up, and OPEC ain't making it any easier. So, Brian, I'm going to flip it over to you. You can start sharing the headline news on oil. Certainly, we can look at nat gas, and then we'll get over into the equities.
Sure. Yeah. Right now it's been kind of I would say, interesting 12 hours. I'm not going to say 24. We've gotten some headlines out there. Obviously, there was a State of the Union speech. This thus far this morning. All the data that we've seen from economic releases have actually been higher than what expectations are. Spanish unemployment, not really a big mover. I'm not even sure why it's considered like a medium impact. It's actually on the smaller side. But overall, CPI flash estimates accelerating. Yesterday, we saw the headline that the EU was going to probably hold off on interest rates right now because of everything that's going on with Ukraine. But again, they were already supposed to accelerate. They're accelerating even faster over on the CPI side of things, and only predicted to get worse. But yet they're going to hold off any more. From OPEC, we had that meeting that just actually concluded a little while ago. Not unexpected. They are not going to raise it. Again, when you
Their
make
output.
friends, and
Yeah.
I mean, when you don't make friends other places, they have control. They're like, nope, we're not raising it. Sorry. So again, this is why every decision you make has implications down the road. And when they control the power and they're not happy with you, they're not doing anything to help you. So no increase raised whatsoever. We also, on top of that, we had the API inventory report that came out yesterday. Again, API is just the industry specific one. The expectation was there was going to be another surplus of 2.7 million, and it was negative 6.1, which also doesn't go into and bode well with things. And that's where this little truck came in. And then, last night we knew that we had the State of the Union speech that came in right around in. I don't even know if I have one of these for a speech or one of them that looks like a speech. We're going to put it right there. The State of the Union did nothing but also continue to rise it higher. So it's one of those things. We mentioned yesterday we've been looking for a top and a decent kind of base and a pullback and a failure to go higher. Yesterday morning when we were talking, we were right here and we're like, wait, could this be the opportunity? Is this the pullback? No, it did go higher. So the answer is no. And then we had this pullback right here. And right here, you may say, is that the hiccup? And again, it was kind of after hours when the market closed. So you can't really use that it's not really a great time to say, okay, is that the top? Because, again, it was the end of the trading day for oil. And then again, we had a surge, new high, another new high, another new high, another new high. And then there was this little hiccup in the overnight. And again, this is in that European session. But again, it was profit taking from the last 24 hours. So not necessarily anything you're looking for, but it did base, which is great. And then it surged forward again this morning when, again, OPEC Plus gave what their recommendation was going to be, and it's now pushing higher. So, interestingly enough, this is the last time we were back here, and I was looking at this a little while ago, bringing it back to kind of like a weekly, so weekly chart. The last time that we were here, right, it was May of 2011. And if we break through, this is actually a little bit high. If we break through the $14.60 mark, only $3 from where we are right now. I mean, oil's up 477. We're like one day from this. The last time that oil was this high was September of 2008. So again, we're hitting the best years here, 2011 and 2008.
Yeah.
As far as kind of where we are with things. And interestingly enough, they actually had an EV person on, right? Electric vehicle person on this morning. And he says, we're not even at the worst. I mean, it used to be back up at, $148. So, I don't think the worst has come to this. I think the next few weeks are really going to be telling as they try to put on additional sanctions. Anything above $100 is in EV land. They love it. They think this is great. That it'll lead to development. They say this will take us into the future. This is awesome. And it was funny. The CNBC contributors this morning were saying, so are you saying this is good or this is bad? And he's like, well, it's good for EV, but it's bad for everybody because the technology will now have to play catch up, but we're all going to pay the price for it for at least the foreseeable future with things. So, in this same kind of line of things, knows who Ford Motor Company is, right? Ford actually announced earlier this morning, about 2 hours ago, that they are separating their EV and their gasoline engine side. It's going to be considered two separate companies and run completely separately, so they can catch up and go after Tesla. So again, Tesla is now a target by Ford. Ford's separating the business. They're expecting oil prices to go higher, and everybody industry-wise says oil is going even higher, gas is going even higher.
Yeah.
Biden's response was, "Hey, we'll just release 30 million? I think he said 30 million barrels. That's like a quarter of a day. So it's absolutely nothing. No, not in touch with reality whatsoever in the situation. And again, expected to get worse. I'll say this right now. I'm not necessarily surprised at all by the JMMC. And again, I don't know what it means, but Biden said, hey, Russia hasn't even seen the worst yet. Well, we know their cash cow is oil. So are you going after their oil? And again, thus far, what we've seen, anytime you make a hard comment, Russia has a counterbalance to it at the same time. So is Russia going to be the ones that do it? Are they going to weaponize oil like we talked about yesterday? So I don't know. I mean, I get the saber rattling, but at this point with where we are, we're dealing with for lack of a better word, a maniac that may be unhinged at this point. If the worst sanctions haven't even hit yet, what else are you going to do? You've already shut down, locked their country off from the rest of the world. If you decide to say, hey, that's it, we're not going to buy your oil either, take that. A lot of countries are going to have major problems. So, like I said, oil is a very, very interesting one. I still don't have the top. I do know, though, on a weekly basis, we are hitting weekly areas of supply. So that is a good thing. But again, the reason why this is driving forward is because of a geopolitical event. A lot of supply and demand is kind of skewed with geopolitical events because it's such an emotional reaction and it's a scramble. It's not something that they can prepare for because who knows? I mean, where oil is right now, I don't know what happens if all of a sudden there's a war breaks out in the Middle East. I mean, just because it's like, well, they're distracted, let's do it. You don't
Yeah,
know, so it's hard, and that's why we're seeing the volatility the way that it is, and it makes trading a little bit more difficult.
it
Natural gas
is.
is the same thing. Natural
Yeah, I
gas
just
is
want
up
to point
another
out.
4.7.
I just want to point out in oil, we're looking at charts. We're trying to figure out. There is definitely volatility. When there's volatility and price swings, that means there's trading opportunity. Trying to figure out where those supply and demand levels are naturally or historically, looking at levels gets a little difficult when you've got the anomaly thrown in on what's driving the price and war and global disruption. I mean, if you recall, it wasn't all that long ago where during the pandemic, where we had that bizarre situation where oil went negative, right? We had oil below zero because there was no place to store it. You physically couldn't take delivery. There was so much supply sitting on the market that people were paying people to take it to take it off their hands. So this is another one of those weird situations, but we're it's the other extreme. And do we know how far this rubber band can stretch? That we don't know. So definitely some great trading opportunity, but it's one of those ones where when you're trading, you're going to want to trade with risk controls or protections baked in for uh, a black swan event. Although this isn't really black swan, but that tail event of some unforeseen circumstance that absolutely makes the price swing wildly one way or the other. So and I just wanted to follow that up, sort of on what Brian was talking about. So sorry, I wanted to interject there. We can jump over to Netgas.
Yeah, I mean, natural gas is the same. It's been the more volatile, up 4.4%. And I would say right now, I mean, again, in being a trader, for me, I don't limit myself to one thing. You guys know I love the currencies. As Todd said, I believe a chart is a chart is a chart. When you're a technical based trader, do I want to go into the hotbed, the most risky thing? No, it becomes almost a gamble at that point. Trading is not gambling. And again, controlling your risk is extremely important. But the idea is to seek out the best opportunity that you can. One of the things that we knew was coming in today, and not so much on the energy front, but we knew what was coming today is we knew that Powell was going to speak. And this is what Powell said thus far this morning. Wages are rising at the fastest pace in many years. Prices are increasing, and spending is broader range of services, right? He expects inflation to diminish this year because he has to say that, because if it doesn't, then it's his fault that it didn't happen because he's the guy in charge of it.
Yep.
Remember, they said that last year as well, right? The Fed is attentive to risks of higher inflation. Some of the Fed, I'm going to adjust that, and that's probably why the asterisk is there. Some of the Fed is attentive to the risks of higher inflation. He says the Ukraine and the impact in the U.S. is highly uncertain. And again, it is. We don't really have tons and tons of risk. We actually don't do that much with the Ukraine or really Russia in that sense. It's more of a global spillover effect. But he still calls for March liftoff. No mentioning of the rate of the hike increment, which is interesting. And then he reiterates the calls for the balance sheet runoff and liftoff. And again, they're talking about rate hikes. Let me see if there's any addition to this one. No, that was the last one. Basically saying that by removing accommodation rates and balance sheets, we'll be able to shrink the predictable mainly through runoff. Basically, not just selling it, but just letting it kind of run off on its own. The thing we mentioned yesterday is, listen, we know in a rising interest rate environment, yesterday we saw gold up pretty big. Well, gold right now is also down. And we knew that that was going to happen. You're seeing it right now. And again, this is the market preparing for it ahead of time. What happened? We drew this top yesterday. And then what did we see? Early this morning when European stepped in, Powell speaking this morning, he's going to mention inflation and rising interest rates. And again, this is about not being predictive and not about being a crystal ball, but understanding what are we about to hear, understanding that the market is going to pre-position itself. Well, this was a huge drop. We went from 1943 all the way down to 1912, a $30 drop in oil or in gold in 2.5 hours. Were you able to see this last night? Absolutely. We knew that, everything going on from here, really from late last night, the State of the Union drove it down a little bit, and then it just kind of flatlined. Then all of a sudden, the market went up right before the European session, and it says, hey, it's time to sell gold. So it's about understanding the factors that we do know. We can't trade for factors that we don't know. We don't know when the next shoe is going to drop, right, in the Russian invasion. But we did know Powell was going to speak. We did know that he has prepared comments. We did know that inflation is the number one hot button. Biden mentioned it last night, but it was like, we're going to control prices. It didn't really kind of give us any true substance, but we knew that it was going to happen. And that's why you look for these trading opportunities out there. Always find the easy crumbs that are dropped. Vice versa, this morning, again, a nice little profit taking area in here in a simple base that was tested. So gold and silver, not surprised whatsoever that they're both down today. That was kind of an expectation. And indices right now are all positive. And again, if you look at the major headlines, I'll click it just to get us the most recent refresh data. ADP non-farm came in better than expected. There was actually an adjustment, so it's a double, meaning that there was more people being hired back again. If you look at everything over here, it's nothing. It's Powell talking about it, private things. We've seen nothing more. There's no major events besides, the OPEC plus. That's it. There's really nothing more. We don't, the Ukraine still exists. There's not even really many headlines over here. So with lack of any bad news today, the only thing is that, hey, listen, we're moving forward. Everything looks good. Bullard speaking next. And then again, at 10 o'clock, we're going to see the Canadian dollar start shuffling around a little bit. But even on the currency front, we're still kind of in that wait and see attitude. I mean, euro and pound both are down versus the dollar, and dollar yen is up. Why? Because Powell is saying we're going forward with interest rate changes. We don't know what the Ukraine situation is going to be. So again, these are predictable things, right? Could a missile be launched in the next 25 minutes? Sure, it could. I mean, who knows? But you can't prepare for that. So again, this is why it's important to, as Todd mentioned, to make sure that you are in good assets that are protected. Protected in so much of a sense is make sure you understand what your risk is going in. If you don't know what your maximum risk is going in a trade, you have no business trading at this point in time. So right now, I would say look for, the next bit of data we're going to see is Bullard. Again, he is the most aggressive. We'll see what he has to say as far as kind of the outlook. It is an outlook, right? Economic outlook, a monetary policy event. I don't think Powell is done speaking right now. He may be. I mean, we have these comments, but I believe that he's technically testifying. So these are his comments. Testimony text earlier than scheduled. Yeah, but he's testifying. So we haven't gotten all of the actual zingers out there yet. I think that'll be kind of important as well. So I'd really look for 10:30 today. 10:30 is when I'm thinking that we're going to see a lot of reversals. And again, the crude oil thing needs to be absorbed. Crude oil inventories are coming in today as well, and still expected to be high.
We know that he's going to say that interest rates are going to raise in 2 weeks. So we know.
Yeah, he said that already. That's already released.
He's already said that. So, for those who haven't heard it, they'll go, wait, what did he say? Even with the war, it doesn't matter. Unlike the EU, where they are going to take a wait and see situation on how the war in Europe is impacting their economies and how they're going to control their inflation, which is also at high levels. The U.S. is on course to raise rates. We're going to start. The question is does he do 25 basis points? Does he go 50 and front load this? I with the war, that's where I think he'll probably just stay. Let's dip our toe in the water. Although Brian and I have been saying this for a while, either way, it's going from 0 to nearly 0. It's almost irrelevant for an actual number. It's more of a message to the market.
Yeah, and it's not a surprise. It will raise. Everybody knows it's going to raise. It has to raise. The question is, can they raise it enough before the fall? And that's where it becomes a political issue, and that's why Biden mentioned it last night. So, it's everybody understands why they may hold off and only do 0.25, but if they do, it's going to come back to a political message later this fall, and it'll be a bigger swing than it's already predicted to be at this point. Because again, it is such a huge problem, and it's nice to say that, hey, listen, we don't need to do this, but understand the people that are hurting the most are also the people that the last administration changed out. It doesn't become a red or blue issue when you're living paycheck to paycheck and you can't afford groceries.
Issue, right? People at the top end,
absolutely.
If everything costs them 10% more, they're going to go, wow. They might not even notice. Because
it affects every single part of our lives.
They've got people buying stuff. They got someone going grocery shopping for them. They don't even know.
Yeah, they don't care. Yeah, it doesn't. It doesn't affect it. Yep.
Right.
Yep,
their milk and eggs and bread and butter, someone else's buy. They probably couldn't even tell you what the cost of a gallon of milk is. But yeah, to the people it's impacting, they know.
And it's been 2 years of inaction. And again, not that Powell got his term renewed, but if you still renew the guy and you've done absolutely nothing, through inaction is its own form of action. It also doesn't
Well,
bode well for
we
Bernard if
have
she's
had
a
a
continuity.
pandemic
So
going on that I can attest to. Now it's no fun getting this thing. I'm just glad that I was fully vaxxed up and that I'm not going to the hospital. Um, all right, yeah, because I got a frog in my throat. Let's jump over and take a look at the equities because we are looking to open in the green. I mean, things are bid, right? We know oil and energy are bid. Um, Equities after yesterday's rout, at least we're going to try to open in the green. I don't know. Let's take a look.
yeah, I mean,
Here where we
there's
could
no
see some
negative
interesting
data out
levels.
there right now. I mean, the VIX is down slightly. The VIX isn't sure what to do. We're still stuck in the same channel. Yes, it's the same 43.83, 42.43. NQ, it's also in the same exact area. We're sitting right here yesterday at 10 o'clock. There was the initial push up and spike down. We're in the exact same spot. There's no data to drive it one way or the other. Again, this one is still bracketed in. Probably the buyers here and the buyers here. So again, really, there's no movement right now. We don't have any established trends. I would say that NQ at least has the ability on a 15-minute to say, hey, listen, there could be an argument made that, hey, whoops, step back, and say that, hey, listen, we've hit this area twice here, down at 13,944. If we kind of push down in the next 15 minutes, I'd say it's in the same area. YM, kind of the same idea. Yesterday, we talked about having a 50% retracement to 33,564. We talked about the supply area was sitting right here. It was going to be a front run of the 50%. It's exactly what we saw. A front run the 50% and has already pushed back down. It's a little bit too late to get in the trade right now. Same thing. We had the level from here yesterday morning that we talked about, and again we bounced. So we're still kind of in that same sideways channel. And Russell has the kind of the same thing. Yesterday morning we were sitting right here. We're in the exact same spot. So there has been no economic data or anything like that. Everything's going to be kind of blunted right now. The ADP data is great, but remember, this is just ADP. It's not the actual non-farm data. That's what we'll get tomorrow morning. And again, Russell is also kind of smashed in here. Hearing rising interest rates, and we're going to definitely do it, isn't really necessarily the best for the Russell, but
No,
there's not really anything negative about it. It's kind of a little bit of negative and a little bit of positive all at the same time because letting the assets run off is not an initial shock. So it's a little positive, little negative, but it's kind of like, I don't know, what do we do? It's one of those days where, you know, there's just not a lot going out there. And besides Powell, all we have is oil today, which oil is already a hot button. Our inventories, it's really kind of more what's going to happen with sanctions.
yeah.
Tomorrow morning, I think, is going to be a different day. We have unemployment claims, and we have Powell testifying at 10 o'clock in the ISM right afterwards. So, again,
Tomorrow's
Powell is
yeah.
going to get some zinger questions. They're going to come. It's just who's going to ask the question and when we're going to get it. So,
Hey, by the way, Brian just said something. If you missed it and didn't understand it, it was actually pretty big news. It's also from the Powell statement that's out. Not only is he going to be raising, or are we raising interest rates in 2 weeks? That's happening. Uh, the interesting thing was the balance sheet, the Fed's balance sheet. All indications are they're simply going to let the assets run off. Now, if you don't know what that means, the Fed's balance sheet has gotten out of control. They've been buying assets. The way that they generally let those assets come off the balance sheet is because they're interest bearing assets, they're buying bonds, is they'll let them eventually go to maturity. So they'll hold on to them, and as they mature, they simply aren't taking those funds and reinvesting and buying more stuff. They're just letting it drop off the balance sheet. The other way to do it would be for the Fed to get aggressive and start liquidating assets. So while they've been a backstop buying these assets to support the economy, if they really wanted to get super aggressive, they could start selling them. But if they started selling them on the open market, you would see them crush the market because people would see the Fed coming in and selling assets, and someone else is going to have to buy them, and you would see that impact the markets. Instead, they're not going to be selling him. He said while that's always on the table, he said it's always been on the table. Indications are they're going to just let them roll off, which would be much less disruptive. So that is actually kind of an interesting one. All right, we did go a little long today, but then again, we had started 1 minute late. With that, any questions for Nadex, please email us, customerservice@nadex.com. Any questions for Brian, you can catch Brian at support@keeptradingsimple.com. I'm also available. Currently, my email is still todd.rich@ig.com. At some point, I'm sure I'll get a new email address. I just don't know what it's going to be. But yes, as you can tell from the backdrop, I am kind of excited, even though I might not be feeling terribly well. Exciting times for Nadex. We are officially part of the crypto.com family. So more to come there. I'll keep you posted. But for the time being, everything is business as usual. And Brian and I aren't going anywhere. We're going to keep doing these morning shows and everything else. So hopefully you can continue to join us. What did we talk about today? You know what? I don't. Just to recap all of it. It's a lot. Go back and listen. Um, but certainly interesting energy markets. Certainly got a lot of volatility there, and let's see what happens. We expect continued volatility with equities as well. Brad and I will be back again tomorrow morning. Tomorrow morning again is also going to be some interesting news that could be moving the markets along with the headline news we're getting out of Europe. Uh, with that, again, I want to say if you like what we're doing, Facebook or YouTube, please give us a like. Brian and I love doing this. We will catch you again tomorrow morning, and until then, good luck in the markets, everyone. Thanks for joining.